All right, guys, so here we are now diving into factory overhead. So before we do so, or before we do so, I just want to take a quick look at what we've done so far. So remember, we're looking at this particular job, right? So we have maybe job number 71, right? I need to put 71. And in order for us to make these 200 yellow guitars, right, we need all sorts of things, right? We need some direct materials, we need some direct labor, and then last but not least, we need some factory overhead, right? And so that's what we're going to talk about now, because we've already accomplished these and what those journal entries look like. And just to take a trip down memory lane, whenever you have this job from direct materials, you have work in process to materials, right, of X amount of dollars. And then you have direct labor. That one's going to be work in process. And then that one's going to be wages payable, as we've done in the last video, of said amount of dollars. And now we're going to tackle this last one, which is factory overhead. Now, before we get into the journal entry, let's just remember for a second, what is factory overhead? Well, factory overhead includes all of those manufacturing costs, except it does not include direct materials, and it does not include direct labor. It's a catch-all. It does not include these, okay? Right, so what's included in factory overhead includes, your indirect materials. So like, remember, indirect materials is like maybe the cleaning solution for cleaning the factory floors, or it's the screws or the strings, right? It also may include indirect labor, such as the supervisor or the janitor at the location. It may also include the utilities, such as, utilities. And then lastly, you have like depreciation from the machinery and things of that nature, okay? All right, so let's take, for example, this one. It says, assume the Legend guitar incurred 4,600 of overhead during December. So they're giving you the overall total. And now this is the breakdown of that 4,600. So which included 500 of indirect materials, 2,000 of indirect labor, 900 of utilities, and $1,200 of factory depreciation. The $500 of indirect materials consisted of $200 in glue and $300 of sandpaper. So they, the problem further went into that just to show you that these indirect materials were not, they were kind of insignificant in regards to total cost, I guess, right? Because remember, when it becomes a direct material, it must, you must be able to trace it back, but it must also make up a significant cost of the product, okay? All right, so if we're trying to capture what our factory overhead given this information is, it is this journal entry here. Now you should take note that this looks a little bit different from our other two journal entries where we capture direct materials and direct labor. We'll get into that later. But our journal entry to capture this is factory overhead of the 4,600, which we've already been told here. And then here's all of our different things. Now, what I really want to highlight, because this is a really simple journal entry to work your way through, but what I want to highlight is when you have indirect materials and indirect labor, yes, it is, the definition of it is indirect labor and indirect material, but it doesn't, indirect materials and indirect labor do not have its own account. Like, you would never see indirect labor as an account within a chart of an account, for instance. All of that would be considered materials or wages payable, right? But if you look more into detail of this, we would realize that this is an indirect labor or indirect material because it's not significant to the process, okay? And then all the other ones we are maybe quite familiar with. All right, that's pretty much what I have on that one. So in this one, let's go through this particular session, okay? So maybe you guys take a second, read through this problem, and then we will pick up in a second on how to put this journal entry together. So pause it, read it, and then we'll go through it together. All right, so hopefully you paused it and you read through this example, and so now we're gonna go through it. So it says during May, so we're doing factory overhead, right? Let's see, factory overhead, if you're right, there we go, factory overhead. So it says during May, Bergen Company incurred factory overhead as follows: indirect materials of 8,800, indirect labor 6,600, utilities costs of 4,800, and factory depreciation. And now it's asking us to capture the journal entry. Well, all right, May 31st, first up. And so our debit is going to be to factory overhead for sure. Factory overhead. Now, unlike the other example that was provided to us, they gave us the total amount. But some kind of way we'll have to back into that number because they didn't give us our total. But what we do know is our debits and credits must always balance. That's you know, the fundamentals of accounting. So credits, debits and credits must always balance, right? All right. So it tells us that our indirect materials is 8,800. Remember, there's no such thing as indirect materials. So you're just going to click, you're going to put in as a credit materials, and that amount is 8,800. All right. Moving on, it tells us that our indirect labor is 6,600. So two, there's no such thing as an indirect labor account. Even though it's defined as indirect labor, there's no such thing as an indirect labor account. All right, so our indirect labor is just going to be called wages payable. And that amount is 6,600. And then it tells us our utilities cost. And so we're going to do utilities payable. Utilities payable. And that amount was for 4,800. And then lastly, we have factory depreciation. Remember, factory depreciation is also not an account. So it's also called accumulated depreciation. Don't forget accounting 1A, where we did depreciation expense as a debit and accumulated depreciation as your credit. Anyways, so that is 9,000. Oops. Okay, so now we have all of these credits and we know our debits and credits must balance. So even though they didn't give us the amount for factory overhead here, right, we're gonna figure it out. So if we add up all of our credits have to equal our debit, right? So we're gonna add up our materials of 8,800 plus our wages payable of 6,600 plus our utilities payable of 4,800 plus our accumulated depreciation of 9,000, and you should come up with a debit of 29,200. Okay, so hopefully that made sense to you guys. If not, let me know, and then we can go through it again. Okay, so these are some review questions I thought that maybe you guys can all work through. It's really tries to capture what we learned in the prior videos, or what we have learned so far, right? So go through these questions, see if you can answer them without any hesitation. If not, I would really encourage you to read your book and kind of understand the concept of this, okay? And then the same thing with 5 through 7. Just read through this, see if you can answer it, and go from there. You may not be able to get number 7, but we're gonna work on that. And then lastly, I would also encourage you to yes, I have the answer up, but I would really encourage you to look through this particular example, work your way through it, or work through your homework and see if you can come up with a journal entry. Remember, accounting is all about practice, 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 practice. The answer will not always be clear to you or be available to you. So I really encourage you to practice this problem and see where you're missing the mark at, okay? And then on the next slide, I believe the answer will be there, okay? So with that, I'm gonna end this video and we're gonna pick up and talk about factory overhead.